Ah, fuck it. Oops. Part 1, step 1. All right, guys, we're here on slide 1, and this is a commodity report. We got a bunch of stuff to show you guys today. I know we were supposed to have our show yesterday. We've had some conflicting interest lately around that time, so probably be moving to Tuesdays around 11. I'll be a little bit more consistent on the time in the next couple of weeks. I've been busy during the days for probably another week or so, and then after that, I'll be back to a normal time and normal schedule. So, Sam, anything exciting you this week that you've been looking at that's really sticking out? I mean, we had a quarterly close yesterday.
Yeah, that's really been my highlight of the week so far.
Any monthly charts you're looking at?
Well, I'll tell you the quarterly chart I'm looking at, Jason, is the gold quarterly chart. Can you tell me the last time gold had a quarter this good? It was up, let's see, 19.6%.
It was
I'll
somewhere
tell you, it
between
wasn't this
08 and 20.
century.
It wasn't the century?
No, got to go back to
Ooh.
the last century.
Wait, how much did gold close at this quarter?
19.6%.
Oh man, that's why I missed that. So I was thinking like 14, 19. Wow.
No,
Okay.
you got to go back to 1986.
1986.
Yeah,
Wow. That's a long time.
yeah.
And that's more of a bear market bounce too. So that says something. You know, that's during the big drawdown in gold after the 70s bubble. So, you know, that's a very different environment. And so thinking that like we're having that strong of a quarter this year and it's in an uptrend hitting all-time highs and people are still that interested to drive the price up that much, that's pretty fascinating.
For sure,
I'm
Jason.
glad you brought up that data point because I
Yeah,
wouldn't have even thought about that. That's
yeah.
amazing.
We had Todd Sohn on the morning show at Stock Market Media
Yeah.
today, and I thought it was really interesting. He was talking about the fund flows into like GLD and some of the gold stock ETFs as well, like GDX. But there has been absolutely nothing there this entire time. Gold has been rallying. But he said everything changed when gold crossed 3,000.
Hmm.
Thought that was kind of interesting. It's just a very psychological number.
Now people are interested.
A lot of people are interested, and you can see it in the data. That was really fascinating to me.
It's interesting because the public always kind of gets into things at a very bad time. And not saying that this
It's
is a
worked
bad
out well for them so far.
Yeah, so far so good in gold, but you know, it's just normal for the public to kind of get into things at a certain point after the move has happened. And not a big deal. This happens. But at the same time, and once again, I'd rather them buy, you know, higher and try to sell higher. But the thing that they do is they buy at 3,000, and then when it drops, and I'm going to hold it for the next, you know, century. And as a trader, you just got to be very specific with what are you doing. Is your idea as a trader to make money in some of these trends, or is your idea to um, come in, buy something, and then hang on to it because you believe it's going to be awesome for the next century? There's different ways to do it, and you can do a little bit of both. Like myself, like I own gold and silver. You know, I store it myself in a couple different places. You could store them at banks, you could store them in safes, you could store them at your grandmother's house, whatever you want to do. There's a bunch of ideas with it. I'm actually sounding like I'm listing things that I've done in my past. Buried in the yard.
You're
I
a
could
real
go on.
gold bug, Jason.
Oh, for sure, for sure. But at the same time, I know that gold, the tradable gold that I trade, that's just a whole different thing. That's something that I hang on for trends. I buy and sell it. I don't think about it when it goes back into a downtrend. I'm not going to sit here and be on here and be like, well, you guys are getting a great opportunity now that gold is sitting at 2,000. You're going to wait for it to be in an uptrend again, and then I'll start talking about it. But as a long-term store of wealth and value, I think gold is a really great way to do it. I think it's if you're talking about something that you can have and hold and is going to last generations in your family, gold's about it. Copper isn't going to do it. Palladium, platinum,
Corn. What about corn?
silver, corn. Corn's not going to do it. None of these things are really going to do it on that very long-term time scale, but gold will hold its value over that very long-term period of time. So for those reasons are the reasons why I think about it, something to hand down to your family members as you go on and so on. And hopefully they can do the same and they can do the same and it'll look the same at that point. So that's why I like gold. Um, as a holding asset, what we're talking about here is always trading. So let's get to the chart. So chart one, starting out with gold versus silver. And to me, this is like we've been talking about this setup for a long time. Me and Sam have continued to just be like, hey, silver's going to catch up at some point. And now silver's kind of catching up. Is it over 35 today still, Sam?
I'm not sure about today. Let's pull it up. It's at 34.40 right now.
Okay,
We're 60
34.40.
cents shy of that big 35 level.
But I know we touched it, right?
We've touched it, but we haven't got to close. Let's see. We closed above it. Okay, on Thursday the 27th, we closed above it, and that was the second time. We also closed above it on October 22nd last year, which was quickly met with a lot of selling pressure and a 17% drawdown.
Nice.
So far, the Bulls have held it up here near 35. I want to see them really decisively break it above that level. But for everyone at home, we talk about that 35 level all the time. And not only does it have a lot of price memory, on that chart, you can see the blow off top around 2010, 2011. After it did that little blow off top, it consolidated around that 35 level for a long time. So there's a lot of bag holders at that level. So we've been wanting to see that overhead supply get absorbed. And then I think that would lead the path of least resistance higher towards that $50 level, which is the peak from 1980. You can see. Maybe that was 81. When was that? The Hunt Brothers squeeze?
Oh, that was I think that peaked in 81. I think you're
Yeah,
right. Yeah.
yeah. I'm not the best with the
81 or
exact.
82, everything was like I think silver actually peaked before gold, so maybe 79 and then or 1980 and then gold peaked right after that. It's a line chart so it's not showing that secondary peak in gold, but yeah, it was a nasty period and the period that Sam was talking about when I mentioned it was in a bear market during that time. You're looking at that possibly right about here. So, we're kind of bouncing off of these major lows. Most of the time, you see big moves like that when we're in a bear market, call it a short covering rally, whatever you want to call it. But today, seeing that gold's all the way up here, and we're seeing the same type of quarterly performance. I mean, that's wild.
Yeah, definitely. And I think what this chart speaks to very powerfully is that gold and silver throughout history have traded together. They dance together, much like gold and copper have danced together for decades now. Silver does the same thing, and silver is it's close to making new multi-decade highs, but it's still in a big range and it hasn't really broken out decisively to new highs like gold has. It's been over a year now since gold broke out to new all-time highs and it's screamed higher. I don't know how much um, it's made. I think it's like 60%. If you bought that breakout on March 4th, 2024, you'd
Mhm.
be up, yeah, just above 50% right now. And
Nice.
yeah, so I think
Outperforming
that is
everything.
what the catch-up move is silver not only has to get to 50, but maybe it has to break out and get an extra 50% above that $50 level. I mean, that's how I see it.
Yeah, and getting above this 35 level I think is the key too, Sam. And I think, if we get above that, there's no telling where this thing really goes. There's not much price memory until 50. So I could see that being a huge move incoming right now. And not to mention gold and silver, like in the last, I think it was 15 years, we normally see these big moves kind of happen around April, May, and all the way through August. So I wouldn't be surprised to kind of see the seasonality kind of kick in and see more and more people kind of get interested. Because there's not really much going on during the summer months. The sell in May and go away thing is for the stock people. Sell in May and go away, it doesn't work for gold. It usually is the thing that is outperforming at that time. Sometimes bonds are outperforming at that time as people kind of move into safe havens. So I definitely like the idea here of owning gold, silver. I think it's going to be the trade of the year. It already is. It is either going to continue to be, or we've made a great profit and we'll just turn it down and we'll get stopped out at some point, and who cares?
People keep talking to me about these energy stocks, Jason. It's quite funny, I think. Like, sure, energy has worked, and I don't want to hate on the energy trade too much, but so far the XLE is up 10% this year, which makes it the best S&P 500 spider sector year to
Yeah,
date. But GDX, GDXJ, SIL, and SILJ, all of the gold and silver mining ETFs, are up like over 30%, which is
yes.
extraordinary. So
Over
you talk
30
about
is wild.
10% in energy, but these miners are really making moves. Honestly, nothing is hotter on planet Earth right now than these mining stocks.
Well, I think what happens too, and this is something for people to look into themselves about sometimes, which is think about when you're looking at GDX, and I think this is what's going on for most people out there. When they see GDX and they hear us talk about it, we're excited because we have positions. We're doing well in those positions, and I think a lot of people are like, "Oh, we missed the move," so they don't want to touch it. And energy to them feels like the new move, the next thing. And it could be. However, you want to be where the outperformance is. And even if it's a situation where you're a dip buyer, you wait to buy dips in the gold miners, whatever it is, I still think there's a huge trade there. And it might be better than energy. There's no way to know that. But the way I like to do it is when you get the signals, you take the signals. So energy, you get the signal, it breaks out above, let's say 99. You got a great signal there to get long energy, but also don't overlook gold or the gold miners. Those are killing it.
For sure, Jason. And much like the silver trade we were just talking about at the top of the show, the miners tend to play catch up with gold. So you have that aspect of it too, is that mean reversion move, which can be very, very dramatic. And that's so far what we've seen this year. It's absolutely screaming higher.
Yes. So let's hop into this one. So copper tapped a 52-week high last week. Oil hasn't gone anywhere, and this is to Sam's point. We keep talking about oil and how great it's going to be, your energy. Gold's the thing that's moving. Copper's the thing that's moving. Right now, if you want to be and take advantage of, stocks that are in those spaces, that's what you want to do, whether it's a gold miner or a copper miner. Oil, when this thing starts to move, it's going to really move too, but we're just not seeing it yet in the data. Um, Getting up above $80 would be very significant for oil. We haven't seen that in a while. And that would be something to go, okay, now I get it. We're going to, start getting long oil and oil stocks and energy stocks, and it's going to be great. But for now, I think the trade is obviously in these other areas, gold and copper. Copper being the next. If you want the next big thing, look for the copper miners. Those are probably going to be the thing that really takes off soon.
For sure, Jason. These commodity super cycles, they start with the gold, then it moves to copper, and on and so forth down the line. And oil eventually starts to work. But I need to see it personally. Like, you have
Yeah.
a very well defined level of interest there at 65 or 70 that you can take long bets against. And it's very clean and it's very clear, and your risk is well defined. So I totally understand that and respect that. But for me, I want to buy strength. I want to buy the best trending assets in the world. And oil just isn't that. It's just a big fat mess.
Yes. And I think there's a couple things to say about it. One is when this thing moves, it's going to really move. And that's important.
For
Something for
sure.
everybody
We've
to
seen
keep in
that
mind.
over and over. These bull markets and energy are extraordinary. But
They really explode higher, and I think that's going to happen soon. I think it can happen. But I also think I agree with you completely where it's like, are we trend followers or are we trying to buy mean reversion? We have a reversal model. It got long oil, but that's about it. There's no trend signals. There's nothing you could say, hey, it's in an uptrend now. You're just
Like over
basically,
every single time frame, it's in a downtrend. Like
yes,
I use the
every
monthly
time.
PPO a lot, and
This is a
it's
52-week low. That's as significant of a
yeah.
primary trend as you can get. It's hitting that, something that's technical analysis 101 as well. And this is something that even goes against my own case, which is the more times you hit a support level, the more likely you are to break below that. And so looking at this one in oil and seeing like it just continues to hit this 65 level over and over and over again, that's not a good sign. So we really want to see that prove itself. We want to see it get above 80, and then we can get little bit more bullish about it.
And Jason, on the other side of that trade, what if crude oil were to break down below that 65 to 70 range? What would that say to you? Would that be it's just oil's its own thing, or do you want to be more cautious? Do you want to tighten up your stops with your copper and gold trades?
I think
How do you think about that?
I think so. I think the last thing you said, which is tighten up your stops, possibly look for an exit. Like if you're discretionary, like I'm systematic, so I'm not going to be doing that. Once I enter a position, it's the trailing stop, it's the exit that's going to get me in and out of the position, and that's it. But if you're discretionary, you're looking for something to say, hey, here's a sign that I should probably get out of oil, and get out of copper and possibly gold. Gold could do okay in this environment. What I think is if, let's say, oil starts to get into the 50s, I think a liquidity event is coming. Some sort of event that looks, it doesn't have to be as significant as something like,
It
you
doesn't have
know,
to be a great financial crisis.
no, it doesn't have to be the great financial crisis or anything, but it could be, COVID was a liquidity event. 2018, the big drawdown in 2018 was a liquidity event. And if you look at those liquidity events, 2016, the 2015-16, that was the industrial recession in the United States. So here, if is what I'm looking at, that's the industrial recession. This is 2018. That was a big drawdown that happened very quickly in 2018. And then here was COVID, big drawdown. So I think if oil's doing that, I think that's what we're going to see, and most of some extent, gold will be the one that holds up the best. Copper will be the one that holds up the worst, and then oil's just going to lead the way either way. So I think that's the best way to look at that at the moment.
Yeah, no, I like that a lot. I totally agree.
So then if we look at energy, just highlighting the long term, the monthly close that we got yesterday was pretty significant. Big candlestick, a lot of wick. But really, to me, I want to see this month turn into, we're getting above these levels. We're closing above 95. That to me is going to be the real signal to say this trend is on. For now, we got a false breakdown signal a couple months ago, a few months ago now. And so that's kind of what we're holding on to in a position in this at the moment. But that doesn't always lead to huge uptrends. We really need to break above that 95, 96 level and really get above 99. 99 is going to be the most significant level that we can get above here. Start to get above 100. I think we're going to run to 110 pretty quickly. But once again, we have all of these trades. Setting up in the gold mining space, in the copper mining space. I would continue to look in those areas. And one last thing on energy, which is the seasonality of the XLE over the past 25 years since the ETF started. If we're looking at April as a good month, see, this is something that I want to clear up too, which is people always talk about the seasonality for oil and gasoline. And they go, the price goes up in the summers because of the driving season. And in the winters, it doesn't do anything and actually goes down because nobody's driving anywhere. And that's a blatant lie. The travel season would actually be for Christmas and possibly New Year's, and those 2 months are pretty bad. But if you look at the normal winter months, February, March, coming into spring, you're seeing that that's really a very hot seasonal period for oil. And so as we get into or energy and oil, but as we get into April, I do think that this is going to be a time where it can either prove itself or not. To me, if oil can break out, start moving up, get very strong, or sorry, energy, the XLE, if we can get above that 99 level, I say now's the month that that should happen. If we get into a situation where it hits resistance and it starts to move lower, I would say that's a very bad sign for the energy sector. And so it's got to make or break point to me. I think it's going to be fine. I think it should go higher. I think that makes the most sense here. But at the same time, markets are dynamic. Nobody has perfect information in markets. So I do think that anything can happen. So just watch it. If it can't really prove itself and break out here, I would probably bet against it.
Yeah, Jason, I also included the crude oil seasonality, which I think tells a little bit of a more clear story. If you can go to the next slide.
Yeah.
Do you have it?
Yeah, Sam.
I added it last second, so you might have to refresh.
Turn your go out of the room and come back in. For some reason, your mic's funny.
Okay.
Okay. Sam will be right back. He said, go to that crude oil seasonality chart. I don't see crude oil seasonality, Sam. Okay, Sam is back. Hey, Sam.
Do I sound better? Or
yeah, you're good.
Like a weirdo?
You're good. Sometimes it does that stuff to me where it changes my mic settings or something when I do something.
Yeah. Yeah, I'm not very good with the technology, Jason.
Nobody is.
No, I love your point about April though. It's a huge month for crude oil. Going back to 1984, the best average month of the year is April. And then you just get a steady decline into the summer, and then you really puke in October and November. Those are the only 2 months that historically have had average drawdowns. So I think you're spot on with the the late winter being strong, but early winter is without a doubt very, very weak.
Yes.
Which is interesting. Maybe it has something to do with Christmas and Thanksgiving.
Well, Thanksgiving also has pretty good seasonality too. So it's kind of interesting to think about it, like why. And if you look at the actual chart of crude oil, January is actually a little bit better than XLE. So it's a very like interesting relationship that I continue to overthink too much. but I'd like to know a little bit more. So we did get a question. Is the divergence in copper and the Chile ETF hinting at something, or the ETF will catch up? And once again, it's hard to kind of understand how exactly these are all going to move. The Chile ETF has actually done pretty well this year, but I do think that it could possibly catch up. It's you're looking at companies when you're looking inside of these countries, and sometimes, and not to mention, you're also looking at their currency. If their currency is strong, you could usually have a stronger ETF. If their currency is weak, you'll have a weaker ETF. But just kind of looking at that, I do think there's money to be made in the international market still. I'm sure it'll pull back at some point. I'm sure it's not going to be the prettiest trade because it hasn't happened in many years. But I think all of those pullbacks are possibly opportunities for people who like to buy mean reversion. But I think that the trend is probably higher for most of these international stocks. But also, I like copper more than most.
I think a little important caveat to that is I'm pretty sure I don't have the data in front of me, but I believe decades ago Chile was a lot more commodity focused. They had a lot more mining stocks, particularly copper mining stocks. Today, it is by far more financials than anything else. I'm looking at 30% financials and only 18% materials. So you just have to understand what you're looking at here. It's more of a financials ETF. But there
No, I
certainly
agree.
are opportunities there. If you are willing to look under the surface and trade like the individual stocks, there's some great mining opportunities.
Yes. So you asked me right before you had to hop, which chart did you want up?
Oh, just the crude oil seasonality, but we've already gone over it, so it doesn't really matter.
Oh, okay. It wasn't on the deck.
I think you need to refresh yours, but
Oh, okay.
no worries. Let's move on.
All right. So the 10-year yield. We'll just go through a couple more and then we'll hop. So the 10-year yield and the head and shoulders pattern. So what are we looking at here, Sam?
Yeah, I think bonds across the board look like head and shoulders. If you're looking at the yields, it looks like a head and shoulders top. If you're looking at the bond prices, it looks like a head and shoulders bottom. They're the inverse of each other. We all know that. But I don't know, Jason. What does this mean to you? Is this a weakening economy? What's the sitch here? You know, crude oil has been bouncing, but if the 10-year yield is resolving this top, crashing lower into the three handle territory, I have a hard time picturing crude oil hanging in here above 65, 70.
I do too. And sometimes head and shoulders or any type of consolidation can either be a topping pattern or a continuation pattern. So what we're looking at here, I think for now, it's possibly just another pattern building. I don't know which way it goes, but I think just like we said earlier, if this starts to break down, crude oil will start to break down as well. And that's telling us that something is different about what we're looking at right now. Right now, looking at some of these international stocks moving, the commodities moving, there looks like there's liquidity out there somewhere. So if there's liquidity out there somewhere, the market shouldn't just crash, like and then oil shouldn't just crash and so on. But once again, I don't have perfect information. Nobody knows the future and all the ins and outs of everything else. So I do think that this is just a situation where we just got to wait and see. Don't want to overthink this yet, but I think keeping this chart on your list, something that you watch that level, or create an alert, which will send you a text when you break that level. Something like that, I think, is really necessary right now.
I think the Federal Reserve is still planning on doing 2 rate cuts this year, Jason. Any thoughts in that department? Do you think they're going to be doing more? Do you think they're going to do less? Do you not really care?
I don't care too much, but I'm not sure how that all ends up at the moment. I think that if we look at the Fed and just kind of get an understanding of they're going to just have to say a lot of things, do a lot of things, and there's going to be a lot of changes before those rate cuts come into play. But also they are starting to loosen up quantitative tightening. So I do think that they are still planning to cut more. I just don't think that any more cuts will do anything good for the economy besides create a bunch of inflation. And if that's your goal, hey, cut the rates, start flooding the market with liquidity. We'll get a bunch of inflation. And so the SHI ETF hit a new multi-month high.
Yeah, so this is like the inverse of the 10-year yield that we were just looking at.
Mm-hmm.
And as you can see, this one has resolved already. So if this is a leading indicator for the 10-year, then the 10-year is likely to be heading into the three-handle territory. And I honestly am leaning towards more than 2 rate cuts this year. The bonds have kind of been leading the way. The Fed doesn't really matter. They just do what the bond market tells them to do. So I think the bond market is telling them that monetary conditions are too tight, and I think they're going to be loosened up. They're going to let the juice loose, Jason, and I think that's got to be bullish for commodities.
Yeah, I think it might affect oil and commodity. And that's the thing about the liquidity event that I'm thinking of. It might affect oil and commodities in the short term. But in the long term, I think that's going to send commodities a lot higher. And then Nick said, If the Fed cuts more than twice, more than likely because they're forced to. No bueno in that situation. Yeah, I just think it's going to turn out badly. I just think it's going to turn out badly if they're kind of in that situation where they just have to cut. Um, I know, like the economy in the United States isn't looking that good. The people aren't that happy. There's a lot of problems right now, so they might have to cut rates because of that. And if they do cut rates, it's just going to lead to a lot more inflation, a lot more angry people. But for us
And
traders,
isn't
and
that when you want to back up the truck, Jason? Is when the Fed really starts to freak out and cut
oh
the
yeah,
rates. Like historically, that has been the great time to back up the truck and buy risk assets, commodities, pretty much everything.
yeah, pretty much everything. And I do think that is the case. I think we're very close to that type of event. Um, so all right, so one more. We'll go through one more, and then we'll hop. Let's go to lumber.
You don't like my quarterly candlesticks?
Are they quarterly on here? Oh, that's nasty.
That's a nasty OJ candlestick.
Yeah.
I just had to admire that. But let's talk about lumber.
Wait, but real quick, how far is that? How big is that percentage?
Oh, let me pull it up. Give me 1 second.
OJ candlestick.
That's a nasty one. So that is a negative 49% candlestick that you're looking at there.
Wow.
That is by far the worst month ever for orange juice. I'm not sure how many lock limit down days it had, but boy, were there a lot of them. So before that, the worst month ever was back in October 1996, it looks like, and that was a negative 30% down quarter.
Interesting.
Yeah.
So lumber making a nice breakout.
Yes,
What are
it
you
is,
thinking here,
Jason.
Sam?
Yeah, no. So everyone's talking about these tops and the home builders, ETFs like ITB. They're a very, very important industry group for the stock market, and I think just generally, the stock market is a leading indicator for the economy. It's a discounting mechanism, and seeing home builders crash is not something the bulls want to see. Back in the beginning of this cycle in late 2022, early 2023, a lot of economists and a lot of the sell side banks were calling for a recession in the United States and in the broader macro economy. And they couldn't have been more wrong. The first half of 2023 was the best first half for the NASDAQ 100 ever. The economy soared, stocks soared, commodities soared. It was incredible. And what really tipped that off, why we were bullish during that time, or part of the reason why we were bullish, was home builders were ripping. Everyone was saying that should not be happening. But sure enough, price just kept going up, and eventually the narrative shifted and people caught up to that, and sure enough, they've carved out massive tops. So I think that's what I've been thinking about: is are the home builders leading the way lower after they were previously leading the way higher? Now, how lumber ties into that, I don't really know. This one has confused me, frankly. It looks like the pretty much opposite of the home builders ETF. And I know this isn't the most liquid market, but I still trust the commodities markets to give us accurate prices and an accurate uh,
Yep.
depiction of supply and demand in the real world. And if lumber futures are climbing out of this pretty textbook bearish to bullish reversal pattern, I have a hard time picturing a world where shit is hitting the fan, home builders are crashing, but maybe I'm just overthinking it. I don't know. What do you think about this chart, Jason?
Yeah, I mean, you could get it. There's so many situations that we could talk about here, but I think it's more of a like, let's take it one at a time. But to me, I think it gives evidence in exactly what you're saying, which is, are we in an environment where we're in a bear market? And it just doesn't seem like it. Copper, oil, and lumber are usually crashing way before. They're the best signals to find before something happens. And at the moment, copper and lumber are in uptrends. So that tells me that the market isn't as bad of a condition as people believe at the moment. So that's all. I don't really have much more to say on that. I think lumber is a great trade right now. I think if you do have access to trade it, you trade it.
For
Um,
sure, Jason. Like, I didn't show the data here, but back in 2020, 2021, this was like the best commodity to own. This thing absolutely soared higher. And I could zoom out all the way back to like 1970. It resolved like a 50-year basing pattern.
yes.
And now it's just flipping that former resistance into support right
Mhm.
here. I think it's right around that 500 level.
Looks like it's ready to make a big move. So,
Yeah,
all right, guys, we'll be with you next week. This is the Commodity Report. Thanks, Sam, for coming. Make sure to give Sam a follow on Twitter, and we'll see you guys soon.